Hold on. Before you celebrate Christmas, there's a Social Security shakeup happening right now that could affect your December payment, and tens of millions of Americans need to know about this immediately. Here's the bombshell. If you were born between the 21st and 31st of any month and receive Social Security retirement benefits, your payment is not coming on Christmas Day as scheduled. Instead, the Social Security Administration has moved your payment to December 24th, Christmas Eve, one full day early. But here's what they're not telling you clearly enough. This isn't a bonus payment or a duplicate check. It's your regular December payment arriving early because Christmas falls on a Wednesday this year. But wait, there's more. If you're on supplemental security income, you're getting two payments in December. One that already arrived on November 29th, and your January payment hitting on December 31st. That means no payment in January 2025. This could throw your entire budget into chaos if you're not prepared. And starting January 2025, the new 2.5% cost of living adjustment kicks in, bringing the average monthly benefit to $1,976. But that's significantly lower than recent years when inflation was skyrocketing. With rising Medicare Part B premiums potentially eating into that increase, will you actually see more money in your pocket? I'm breaking down exactly what these changes mean for your wallet, which payment schedule applies to you, and the critical mistakes you need to avoid this holiday season. If this information helped you understand your benefits better, smash that like button right now so more people can stay informed about their Social Security. All right, let's dive deep into what's really happening with Social Security right now, because there are some critical details you absolutely need to understand before this month ends. Now, I know the payment schedule changes might seem straightforward at first glance, but trust me when I tell you that there are layers to this situation that could impact your financial planning in ways you haven't considered yet. So let's break everything down piece by piece, and by the end of this video, you're going to have absolute clarity on what you need to do to protect your money and maximize your benefits. First things first, let's talk about what's happening with those December payments that are shifting around the calendar. If you were born between the 21st and 31st of any month, you're getting your Social Security payment on December 24th instead of the usual fourth Wednesday schedule. Now, why does this matter? Well, Christmas Day falls on a Wednesday this year, which is normally when that fourth week payment would arrive. The Social Security Administration doesn't process payments on federal holidays, so they've moved everything up by one day. That might sound like great news, getting your money a day early, right? But here's where people start making mistakes. Some folks see that early payment hit their account and think it's some kind of bonus or extra payment from the government. Let me be crystal clear about this. It is not extra money. It is not a Christmas gift from Social Security. It is simply your regular December payment arriving one day ahead of schedule because of the holiday. I'm emphasizing this because every year when payment dates shift, we see people spending that money twice in their minds, not realizing it's just their normal benefit coming early. Then they get confused in January when they're wondering where their money went. You've got to track these dates carefully and adjust your budget accordingly. Now, let's talk about the SSI situation because this is where things get really interesting and, frankly, a bit confusing for millions of Americans. Supplemental Security income recipients actually got two payments in November. Wait, what? Two payments? Yes, you heard that right. Here's what happened. The December 1st SSI payment was supposed to arrive on December 1st, which fell on a Sunday this year. Social Security doesn't send payments on weekends, so that payment got pushed back to Friday, November 29th. That means SSI recipients received their November payment on November 1st and then turned around and got their December payment on November 29th. Two checks in 1 month. But hold on, because here's the part that throws people for a complete loop. There's going to be another SSI payment on December 31st. Now you might be thinking, wait a minute, didn't they just get December's payment already? Well, yes, but this December 31st payment is actually your January 2025 payment being paid early, because January 1st is a federal holiday. So let me paint the picture clearly. SSI beneficiaries got two payments in November, they're getting one payment in December on the 31st, and then there will be no payment when January rolls around because you already received it. This kind of calendar quirk happens occasionally, and if you're not paying close attention to what each payment actually represents, you could find yourself in serious financial trouble come mid-January when you're expecting money that's not coming. This is where budgeting becomes absolutely critical. If you're living paycheck to paycheck on these benefits, which many people are, you need to set aside some of that December 31st payment to carry you through January. Don't let the excitement of getting what feels like extra money cause you to overspend during the holidays. I've seen too many people get caught in this trap, and then they're struggling to pay rent or buy groceries in the middle of January because they didn't realize they'd already spent their January benefit back in December. Mark your calendar right now. Write it down. Set a reminder on your phone. Whatever you need to do to remember that there's no SSI payment coming on February 1st either, because that's a Saturday, which means the February payment will arrive on January 30th. You've got to stay on top of these dates. Now let's shift gears and talk about something that's going to affect everyone receiving Social Security benefits starting in January: the cost of living adjustment. The COLA for 2025 is set at 2.5%. which will add about $50 per month on average to Social Security benefits. At first glance, $50 extra each month sounds pretty good, right? That's $600 over the course of the year. But before you start planning how to spend that increase, we need to have a serious conversation about what's happening on the other side of the equation. Medicare Part B premiums are going up to $185 per month in 2025. That's an increase of $10.30 from what you were paying in 2024. Now, for most Social Security recipients, that Medicare premium gets deducted automatically from your check before you even see the money. So let's do the math together here. You're getting about $50 more from the COLA increase, but you're immediately losing $10.30 of that to the higher Medicare premium. That means your actual net increase is only around $40 per month, not $50. And that's assuming you're paying the standard Part B premium and not subject to income-related monthly adjustment amounts, which we'll talk about in just a minute. But it gets even more complicated when you look at what's happening with healthcare costs overall. The Medicare Part B deductible is also increasing by $17, jumping to $257 for 2025. That's money you've got to pay out of pocket before Medicare starts covering your medical expenses. And here's something that really concerns me for people on fixed incomes. While your Social Security is going up by 2.5%, many of your actual living expenses are rising faster than that. Housing costs, utility bills, groceries, prescription drugs that aren't fully covered by insurance. All of these things have been increasing at rates that often exceed the COLA adjustment. Let me give you a real-world example of how this plays out. Let's say your Social Security benefit before the COLA was $1,900 per month. With the 2.5% increase, you're now looking at about $1,948. But if your Medicare Part B premium increases by that $10.30, you're really only seeing an extra $38 in your pocket. Meanwhile, if your homeowner's insurance went up by $200 a year, that's eating up more than 4 months' worth of your COLA increase right there. If your property taxes increased, if your supplemental health insurance premiums went up, if your utility bills are higher because of a cold winter, all of these things can completely erase that cost of living adjustment before you know it. And speaking of Medicare premiums, let's talk about those income-related monthly adjustment amounts, because this is something that catches a lot of people off guard. About 8% of Medicare beneficiaries pay these higher premiums based on their modified adjusted gross income. If you had significant income in 2023, that's what they're using to determine your 2025 Medicare premiums. Maybe you sold some property, maybe you took a large retirement account distribution, maybe you had some investment income that pushed you over the threshold. Whatever the reason, if your modified adjusted gross income exceeded certain limits, you're paying substantially more than that standard $185 premium. These IRMAA surcharges can add anywhere from an extra $68 per month all the way up to several $100s per month, depending on your income level. And the frustrating thing is that even if your income situation has changed since 2023, even if you're back to normal income levels now, you're still stuck paying those higher premiums for 2025 based on old tax returns. Now, there are some circumstances where you can appeal this, like if you had a life-changing event such as retirement or the death of a spouse, but you have to be proactive about requesting that adjustment. The Social Security Administration isn't going to automatically do it for you. Now, let's talk about some critical mistakes you absolutely must avoid, because I see people making these errors all the time and it costs them thousands of dollars. The first major mistake is claiming your benefits too early without fully understanding the permanent impact on your monthly payment. If you claim Social Security at age 62 instead of waiting until your full retirement age, your benefit can be reduced by as much as 30%. That's not a temporary reduction. That's not something that goes away after a few years. That's a permanent cut that affects you for the rest of your life and can even impact the survivor benefits available to your spouse after you're gone. I understand that sometimes you need to claim early. Maybe you lost your job and you can't find new employment. Maybe you have serious health issues and you don't expect to live long enough to make waiting worthwhile. There are legitimate reasons to claim early, and I'm not saying it's always wrong, but what I am saying is that you need to run the numbers and fully understand what you're giving up, because that decision is irreversible once you've been receiving benefits for more than 12 months. You can't change your mind later and say, actually, I want to wait until full retirement age now. The decision is locked in. Another massive mistake people make is not coordinating benefits properly with their spouse. This is especially important if there's a significant difference in your earning histories. The higher-earning spouse should ideally wait at least until full retirement age to claim benefits, because that maximizes not only their own payment, but also the potential survivor benefit. Here's something a lot of couples don't realize. When one spouse passes away, the surviving spouse gets to keep the higher of the two Social Security payments, but they don't get to keep both. So if both spouses claimed early and are receiving reduced benefits, the survivor is going to be stuck with a reduced benefit for the rest of their life too. Let me walk you through a scenario. Let's say the husband's full retirement age benefit would be $3,000, but he claims early at 62 and gets it reduced to $2,100. The wife's full retirement age benefit would be $1,800, but she also claims early and gets reduced to about $1,260. They're both getting money sooner, which feels good in the moment. But now, fast forward 20 years. The husband passes away. The wife, as the survivor, now gets the higher benefit, which is that $2,100 amount, but she loses her own $1,260 payment. She's living on $2,100 a month instead of the $3,000 she could have had if they'd planned differently. Over the course of potentially decades of widowhood, that difference adds up to hundreds of thousands of dollars in lost income. Here's another mistake that trips people up constantly: not understanding the earnings limit if you're collecting benefits before full retirement age while still working. In 2025, if you're under full retirement age for the entire year, the earnings limit is $23,400. If you earn more than that from working, Social Security withholds $1 in benefits for every $2 you earn above the limit. Now, here's what's tricky about this. A lot of people think that money is gone forever, that they're losing their benefits permanently. That's not quite accurate. When you reach full retirement age, Social Security recalculates your benefit to give you credit for those months when benefits were withheld. But in the meantime, you're not getting that money, which can create serious cash flow problems if you're not expecting it. And the earnings limit is different in the year you reach full retirement age. That year, the limit jumps to $62,160, and only $1 is withheld for every $3 you earn above that amount. Once you hit your full retirement age, the earnings limit disappears completely. You can earn as much as you want without affecting your Social Security benefits. But until you reach that age, you've got to be very careful about how much you're earning if you're already collecting benefits. Let me tell you about another mistake that's less obvious but can still hurt you significantly: not checking your Social Security earnings record for errors. The Social Security Administration calculates your benefit based on your 35 highest earning years. If there are mistakes in your earnings record, if an employer didn't report your wages correctly, if there are missing years that should be in there, you could be getting less money than you're entitled to. And the longer those errors sit there uncorrected, the harder they can be to fix because you need documentation, you need pay stubs or W-2s from years ago. You should be logging into your My Social Security account at least once a year to review your earnings history and make sure everything looks right. Another area where people mess up is with taxes on Social Security benefits. A lot of folks are shocked to discover that their Social Security benefits might be taxable. Up to 85% of your benefits can be subject to federal income tax, depending on your total income from all sources. The formula for this is complicated, but basically, if your combined income exceeds certain thresholds, a portion of your Social Security becomes taxable. And that combined income includes not just your wages or pension, but also tax-exempt interest, half of your Social Security benefit, and other types of income. If you're taking withdrawals from traditional IRAs or 401ks, that's adding to your taxable income and potentially causing more of your Social Security to be taxed. This is why tax planning before and during retirement is so crucial. Let me also touch on something that affects people who are divorced, because this is another area where benefits are often left on the table. If you were married for at least 10 years and you're currently unmarried, you may be eligible for benefits based on your ex-spouse's work record. And here's the beautiful part. Claiming these divorced spousal benefits doesn't reduce your ex-spouse's benefit at all. They don't even have to know you're claiming it, but you have to know to ask for it. The Social Security Administration isn't going to automatically tell you about this option. You need to understand the rules and specifically apply for divorced spousal benefits if you're eligible. Now, as we're wrapping up here, I want to talk about what you should be doing right now to protect yourself and maximize your benefits going forward. First and foremost, if you haven't already, create a My Social Security account online. This gives you access to your earnings history, your estimated benefits at different claiming ages, and your payment information. You should be reviewing this regularly, not just once and forgetting about it. Second, if you're approaching retirement age or you're already retired, sit down and create a comprehensive budget that accounts for all of these changes we've discussed. Factor in the COLA increase, but also factor in the Medicare premium increases and any other expenses that are rising. Be realistic about your costs. Third, if you have a spouse, you need to have serious conversations about claiming strategies. Don't just both claim as soon as you're eligible without running different scenarios. Consider working with a financial advisor who specializes in Social Security planning, because the right claiming strategy can literally mean tens of thousands or even hundreds of thousands of dollars difference over your lifetime. Fourth, if you're still working and not yet at full retirement age, be very careful about how much you're earning if you're already collecting benefits. Understand those earnings limits and plan accordingly. And finally, stay informed about changes to Social Security rules and payment schedules. Subscribe to this channel, turn on notifications, because I'm constantly updating you on changes that affect your benefits. The bottom line is this: Social Security is probably going to be one of your primary sources of income in retirement if it isn't already. These December payment changes, the COLA increase, the Medicare premium adjustments, all of this matters tremendously to your day-to-day financial well-being. Don't treat it casually. Don't assume the government is going to automatically do what's best for you. You have to be your own advocate, understand the rules, and make informed decisions. That's how you protect your financial future and make sure you're getting every dollar you're entitled to receive.